Remember early 2020? The world felt like it was grinding to a halt. Streets were empty, businesses were closed, and an unsettling quiet fell over our cities. For many, it was a time of deep uncertainty and fear, not just for our health, but for our financial futures. The stock market, that seemingly unshakable giant, began to tremble. On March 9th, 2020, the Dow Jones Industrial Average plummeted over 2,000 points, its worst single-day drop in history. They called it Black Monday. But that was just the beginning. The days that followed saw a cascade of circuit breakers designed to halt trading during extreme volatility were triggered multiple times. The S&P 500 plunged more than 30% in just a few weeks. It felt like the financial world was in freefall. Panic was the word of the day. News channels blared headlines of economic doom. Seasoned investors were liquidating their portfolios, trying to salvage what they could. The message was clear. Get out, save your cash, and brace for a long, hard winter. But amidst this global panic, a different story was unfolding. A new generation of investors, many stuck at home with little to do, saw something else. They saw not a crisis, but an opportunity. While the old guard was selling, they were buying. Fueled by stimulus checks, commission-free trading apps, and a healthy dose of online community spirit, they dove headfirst into the turbulent waters of the stock market. For them, a 30% drop wasn't a loss. It was a 30% discount. They were buying into airlines, cruise lines, and tech giants at prices not seen in years. This wasn't just about stocks. The world of cryptocurrency, already known for its volatility, became a new frontier. Bitcoin, Ethereum, and a host of other digital assets were also on sale. For these risk takers, the logic was simple. The world would eventually recover, and when it did, these assets would rebound. It was a massive gamble, a bet against the prevailing mood of fear and despair. They were called reckless, naive gamblers. But were they? Let's meet Alex, a 28-year-old software developer from Austin, Texas. Before the pandemic, his investment portfolio was pretty standard, a 401k and a few index funds. When the market crashed, his first instinct was to panic, just like everyone else. He saw his retirement savings shrink overnight. But then he started reading. He spent hours on forums like Reddit's, Wall Street Bets, and watched countless YouTube videos. He saw a community of people who were not only unafraid but genuinely excited. He decided to take a leap. He took a portion of his savings, money he was willing to lose, and bought into companies he believed in long-term, companies that were being hammered by the pandemic panic. He also dipped his toes into cryptocurrency for the first time, buying Bitcoin when it was trading below $10,000. His friends thought he was crazy. His parents begged him to be more cautious. It was one of the most nerve-wracking decisions of his life. Every day, he'd wake up and check his portfolio, his heart pounding, wondering if he'd made a terrible mistake. And then, something remarkable happened. The markets didn't just stop falling. They started to climb. And they didn't just climb. They soared? The recovery was faster and more ferocious than almost anyone had predicted. By August 2020, just 5 months after the crash, the S&P 500 had already hit new all-time highs. The tech-heavy Nasdaq led the charge, fueled by our new reality of remote work, e-commerce, and digital entertainment. Those who had bought the dip were rewarded handsomely. Alex's portfolio exploded. The airline stocks he bought at rock bottom prices tripled. His tech investments went parabolic, and his Bitcoin bet, it became the stuff of legend, rocketing to over $60,000 the following year. He wasn't just back to where he started. He had generated life-changing wealth. His story wasn't unique. Millions of everyday people who took a calculated risk saw incredible returns. They paid off student loans, bought their first homes, and achieved a level of financial freedom they'd only dreamed of. It was a monumental transfer of wealth from the fearful to the bold. But it's crucial to remember that for every success story, there are tales of caution. The same forces that drove the market up also created dangerous bubbles. Take the GameStop saga of early 2021. A coordinated effort by retail investors sent the stock of a struggling video game retailer soaring, squeezing hedge funds that had bet against it. For a moment, it felt like David had beaten Goliath. Many early investors made a fortune, but many others, caught up in the hype, bought at the peak, only to see their investments evaporate just as quickly. This period also gave rise to meme coins, cryptocurrencies created as jokes that attracted billions in investment based on social media trends alone. Fortunes were made and lost in a matter of hours. The lesson was clear. High reward always comes with high risk. The line between investing and gambling can become dangerously blurred when emotions and hype take over. The fear of missing out, or FOMO, became a powerful and often destructive force. So what have we learned from this unprecedented period in financial history? First, volatility creates opportunity. The greatest transfers of wealth often happen during times of crisis. As the old saying goes, be fearful when others are greedy, and greedy when others are fearful. Second, the importance of research and conviction cannot be overstated. The investors who succeeded weren't just throwing money blindly. They were betting on a future they believed in, based on their own analysis. They had a thesis, and they stuck to it even when it was uncomfortable. Third, risk management is everything. Never invest more than you are willing to lose, especially in volatile assets like individual stocks or crypto. Diversification, while it may seem boring during a bull run, remains the most reliable way to build and preserve wealth over the long term. Perhaps the most profound lesson is about psychology. The COVID crash and the subsequent rally were a masterclass in market psychology. It showed how quickly sentiment can shift from extreme fear to unbridled euphoria. It highlighted the power of collective belief, both for good and for ill. The investors who thrived were those who could manage their own emotions, tune out the noise, and make rational decisions in the face of chaos. They understood that the stock market isn't just a collection of numbers on a screen. It's a reflection of human hope, fear, and ambition. The events of 2020 changed the world of investing forever. It democratized access to the markets and empowered a new generation to take control of their financial destiny. But it also served as a powerful reminder that there are no shortcuts to building lasting wealth. The principles of patience, discipline, and a long-term perspective are more important now than ever. The next crash will come, and when it does, the lessons from this one will be our most valuable asset. Thanks for watching. If you found this story interesting, don't forget to like this video and subscribe to our channel for more deep dives into the events that shape our world. We'd love to hear your own story from this period, so drop a comment below and let us know what financial decisions you made. See you in the next one!